I want to share this live with you all because this is a great example of major minor psychological movement, the momentum around the 00, the 20, the 50, and the 80 pip level. So this is a short sell where I have my exit parked at the 25 level, expecting price to sink through the 96.50 and carry that momentum through 96.25. But the rule is, or I should say the guidelines are, if we fail to reach that next level down, which in this case was that 96.20 to 96.25 sweet spot, where I would expect support to kick in, as it has, by the way, before, I would then see that this rejection, this inability to get down there, would then potentially mean that we would rally back up to 96.50, which is exactly where we are right now. So what I'm going to do is I'm going to go ahead and close out this trade. Not put in a new order. Close out this trade. There we go. Simply as that. This is an intraday setup. And what I want you to see is we never got to the level. That's not to say that we won't. If I had more than, say, the 2 lots in this trade, I'd probably go ahead and dump 2 here and then look for a potential revisit to the 20 level if 50 is rejected. So I don't know ultimately if 50 is going to be rejected. Here's the danger. So I have my 25 support down here, which I'll paint in green, and I have my 50 resistance that I have in red. Again, we don't know what's going to happen, but if we get above 50, there's a pretty good chance that I could be up at 96.70 or even 96.80, the minor psych level. One is previous resistance, one is a minor psych level, just like that. And I don't want to take that ride because then I'm giving everything back on this short sell. So ultimately what I want to do, again, given more lots, you have more options. Given I have 2, there's no reason in the world that I shouldn't take off 96.50. Now notice I didn't take 96.50 on the way down. I was being a little piggy, and I was being very cognizant of the fact that we had a lot of bearish momentum, some euro strength, which equated also into a sympathetic move for Swiss franc strength, pushing us lower. The Aussie's pretty flat today, understanding that the RBA is looming about, 10.5 hours from now. So I'm trying to capitalize on franc strength against what is just an Aussie in guillotine syndrome, in waiting mode. It doesn't want to stick its neck out, hence the guillotine syndrome. So we couldn't get to 20. I pretty much know at that point there's a pretty good chance we go to 50, and I go ahead and get out. With 4 contracts, I would probably take 2 off the table, keep 2 more for a revisit, which we may see. Notice 50 held. So I don't expect prices to rally up to the previous highs, nor 96.80. I wanted to do this live because understanding the way in which prices move from major to minor psych levels, from the 00 to the 20, the 20 to the 50, from the 50 to the 80, and then to the 0 again, understanding that if we don't make it to that next rung on the ladder, so to speak, we sort of slip down to the last rung. In this case, we were heading down through 50. Could it make it to 20? So we went back to the 50. That's the way this works over and over and over again. So I wanted you to see this live. I wanted you to see my reaction to it by managing those 2 lots that I had in the Aussie Swissy, going ahead and taking whatever profit I had on that very short-term trade, and explaining the process with which minor and major psych levels really can help you understand near-term momentum and exit, or even understand the way in which prices may reverse. So we might head back down to 20. Who knows? We might stop at that 30 level again. This was actually 96.30. Again, who knows? Take your profit when you can. Now, if I had another 2 lots, I'm playing with house money. I'm not risking my capital, and I've realized a small profit on the trade, which, after all, is a trader's job.